Hello, trading is closed on June 15th. Yesterday's call showed I was looking for a gap opening and a trade outside of the day's range pretty promptly. I thought that breakout of the range would be higher, and that's what happened. During the day, MEJT said this rally was a false move. We then hit the target, rallied to these lines, which are MEJT resistance lines, and then dropped, and there's no new MEJT target for tomorrow. We have both positive and negative signs from today's action. When that happens, my trading rules say to look for a gap opening and a rapid trade outside of the day's range. And if that doesn't happen, we should close little change and have a big move the next day. As an example of the mixed indicators, here's the percentage of stocks with favorable chart formations as the market's been approaching all-time highs. This has made a high well under this one, and now we've started to drop. But on the other side of the coin, we've gone over the upper Bollinger on the VIX and then traded back under it, and usually that gives a buy. Let's look at the positive and negative signs on the chart. It's quite negative that we gapped up in a series of higher highs and closed under not only all the highs, but also under the lows. Unless we gap up and promptly take out these highs tomorrow, it should lead to lower prices. However, it is positive that after gapping here, down, and a big drop here, we've held on to these lows. This low here is a target of the prior pattern. If you call this a stilt, and that is stilt, here's your diamond. If you set the height at 50%, you'll see we hit the target. So if the market intends to go higher, this is a good place for us to gap up sharply and move higher at the open. Here's the price of the FOMC announcement. The first move tends to tell us how the market's going to make its next sustainable move. That was higher. We then traded lower by a larger amount. The next move, before trading significantly over this line, should be a rally beyond the line by an amount further than we traded under it. Since we've now traded about 11 points, 10.5 really, I guess. No, it's 11. Under the line, we should now trade more than 11 points over this line, well into the low 2090s if this works. And that if you're positive on the market, that's what you need tomorrow. You need for us to gap up and promptly take out this high. Well, there are a number of ways to count this. Here's the end of wave 1. It's possible for us to count 5 waves here. It's possible to count 1, 2, 3, 4, 5 waves up. That would be A of 2. We could then have 3 waves down, and we could then have a 5 or a 3 wave move up. Again, that's a logical place for it to move. However, that's not the only way this can be counted. If that's an A and that's a B, wave C is equal to A, and rather than this being A of 2, wave 2 could be over, particularly when you see it's a Fibonacci retracement of the whole drop. If we stop here, it has pretty ominous implications because wave 2 is completed. Here's wave 1, here's wave 2, and here's a wave 3 down of multiple degree, and it sure is starting out looking like that's what's going on. Perhaps the most ominous thing on the chart is this trend line. We had a break under the trend line yesterday. It's to mark sustainable move, even if it were not sustainable. Once you retrace to the trend line, it is sustainable. It targets a drop down to about 1917.5. All we have to do for confirmation is to trade under yesterday's close, which we did. So this is forecasting a big drop. To invalidate it, you really have to gap up and take out this high promptly. I think anything's possible, but that's not what I think is going to happen. I think if we gap up over this high, we have higher targets, at least in the 2090s. Anything less than that, we should be at the beginning of a wave 3 down of multiple degree and a very big drop targeting about 1917.5 before it's all over. And that's today's call.